How are y'all doing this afternoon? I have been doing the usual, every Monday meetings and all of that stuff, along with going through all this preparation to talk to you today about the CARES Act and most importantly, the Paycheck Protection Program, or the PPP or the PPP program. Or the PPP program. Yeah, Abby got a laugh out of that one. So today was the first day back to school, a little bit of trying to get back to a normalcy here, and that went all out the window as we had epic fail with the school system this morning. Got a little bit of work done there, Abby did, and so I just want to jump right on in and start talking about this because I think that the PPP is the most important part of the CARES Act, and it's actually going to be the biggest help for you to bridge you from today to the time we are going to be back in business and everything is going to be back up and running. So I have some slides put together, and if you can go ahead and switch over to the slides there for me, that would be great. And basically we're going to just start talking a little bit about the CARES Act and going to just cover some of the basics there. And everybody knows about the stimulus checks that are going to be coming out. That is the biggest part of the individual relief, I think, that everybody's been looking for. There's a $1,200 per person or taxpayer stimulus check that's going to be coming, and along with that is a $500 per child amount. So a family of three like mine would get a check of $2,900. That is based on you do not exceed $75,000 per adult in income. If you do go over that, it does start going away at $100 increments over that, up to a total of $99,000. So if you are a married couple making $150,000 or less, you will receive the full amount that is due. The Treasury Secretary this morning said that we should start seeing those payments going out over the next 3 weeks. So the important thing there is, if you've been getting your tax refund via direct deposit, you're set. If not, I believe that there's going to be a page on the IRS website so that you can register and have your bank account information there so that when they do process that, it can come out via direct deposit. There will probably be a 2 to 3 week delay if checks have to go out. So the second part of the individual relief, which is fairly significant, if you need to pull retirement funds to pay your bills, and I know a lot of people have done that since 2008. I've done some taxes for some individuals that have done that, and you have to pay the income tax on the funds that you've paid out. In addition to that, there's a 10% penalty on that. So it's really big here that they're waiving that 10% during this, and when you have to pay it back, it is paid back over 3 years. So you don't have to take that hit on your taxes all in 2020. It'll be in 2020 through 22. So that's a big thing. And if you are over the age that you are required to take a minimum distribution, that has been waived for this year. Another big individual assistance is having the ability for your employer to donate or contribute to you up to $5,250, and that would not be considered income to you and can be expensed by the company. So that's a pretty big benefit there as well. Ordinarily, when you did that, that would have to be considered in your income. You pay tax on that, but now that's being waived. And the last part, and this is really beneficial for all those gig economy workers, all the freelancers that are out of work right now, they've expanded the unemployment insurance so that not only if you lost your job, but if you were actually running your own business, you actually qualify. And they've waived the 1 week waiting period. They've added an additional $600 a week for 4 months. And on top of that, if you exhaust your benefits that first 13 weeks, well, they're adding in an additional 13 weeks that the government's going to pay for. So that covers the basics of the individual relief. Want to jump ahead now, so if we get the next slide there. So on that next slide, we have the start of the SMB relief. That's the small, medium-sized businesses. So first thing is payroll tax credits. We started hearing about payroll tax credits with the Family First Act, talking about those credits for the sick and the sick leave, paid sick leave, and I can't remember what the other one was, but so much going on here. So right now we have additional payroll tax credits that will take care of employee retention. So if you keep your employees, they will actually allow you to get a credit for up to 50% of the qualifying wages for a total of $5,000 per employee. And there are specific rules for that. I'm not going to get into those rules, but if you do need some information on that, do reach out to us here at the Digital CPA. We'll be able to help you with that. The bigger part of the payroll taxes is you can actually defer your FICA payments. Anything that is from the time the CARES Act was enacted or signed by the president through the end of the year. So you can actually defer those FICA taxes. That would be the 6.2% of the employer side. So that can then get deferred. 50% needs to be paid by December of next year. That's 21. And the other 50% no later than 12/31/22. That's pretty big, being able to push all that payment off for the following 2 years. So I, for one, don't like banking payroll like that. But in this situation, I think it's a huge deal. And as long as you track it and you've got all that under control, it's not a big deal. Just make sure you work with your accountants. And I'm sure, like we use Gusto, I am sure they're going to have a program for that to make sure nothing gets missed. But the crux of what we really want to talk about is the loan payments, the loan programs, excuse me. So we're going to get into the loan programs, and the biggest one is what I've been talking about, and it says Paycheck Protection Program. That's what it's all about. We're going to get into that in a little more detail in just a moment. But the EIDL loans, those are the Economic Injury Disaster Loans. Those are set up through the SBA. You can get up to $2 million, and there is a $10,000 advance payment on that you can get. Now, you can't get both the PPP and the EIDL, but if you do get the EIDL, you can actually roll that over into the PPP. So you can apply for the EIDL, get the advance. That advance would then get rolled into the PPP, the Paycheck Protection Program, and then possibly be forgiven. We'll talk about that shortly. So if you already have an existing SBA, you want to reach out to your lender and find out, because on existing 7A 504 microloans, they are actually picking up where the SBA will make your next 6 months payments. So I believe you have to reach out to your lender on that and figure that out. And that is a big help for those that have those loans. So now we're going to jump to the next slide and get into the Paycheck Protection Program. So this was put in place so that it will help you bridge your business from the time this started till we start seeing recovery, which we expect it to be about 2 months. And what the goal here is to give you the financing that you need for your business to keep your employees working, keep them there so that we're not really putting a dent in the economy. They're there, they're helping out, they're building your business, and then as we come back and we come away from the shelter in place or whatever we're dealing with, the work from home situations, and everything is back, everybody's there, everything's great, and we have the people there, they're happy, they're getting paid, and then on top of that, that 8-week period from the time you got your loan, there's a forgiveness. So let's talk a little bit about that. So to go about getting a PPP loan, you have to contact your banker. These are administered through your bank, not the SBA, and the banks truly are not ready for this. I would say by the end of this week, they'll have all the applications in place, but right now they don't have the systems ready. But the first thing I would do when you're done watching this, reach out to your lender or your banker right now, start talking to them, get it lined up. And it's really important because you want to know, first of all, most of the banks are only dealing with clients that are dealing with that bank. I've talked to like 15 bankers today, and they're only dealing with their clients because they're feeling there's going to be a huge rush and they want to make sure that their clients are taken care of. So reach out to your banker, and then also you want to pull your payroll records for 2019 and year to date up to and year to date. And you'll probably need to pull year to date again when you apply for your loan because they're going to look at those numbers again. The reason those payroll numbers are so important, that is what they're going to base the loan amount on. They're going to look at the payroll costs over the 12 months prior to your loan date and take the average of the payroll cost. Now, what is payroll cost, you ask? Well, that would be wages and salaries. It's going to be cash tips, U.S.-based contractors. So if you're paying a contractor that's not in the U.S., those amounts are excluded. It would be for separation payments or any severance that you've paid, health insurance premiums, your employer retirement contributions, that's the match that you have done, and then state and local payroll taxes. I'm seeing some people are reporting federal taxes, but the bill that I read specifically excluded federal payroll taxes. But half the bankers that have contacted me included that. So there's still some guidance that's going to be coming on this, and we'll make sure that you know all of that moving into it. So what they're going to do is take those numbers, divide it by 12, and that is what your average monthly payroll cost is. They're going to take that, multiply it by 2.5, and that will be your loan amount. That loan amount will then be funded to you. There's no fee, and the interest is capped at 4%. So it's a low-cost loan, no fees up front, and by the way, it's asking if you're getting assistance on these loans when you're doing applications. I know on the SBA site it is at least asking for that because you're not supposed to be billing a fee to be helping with that. So the SBA is going to be checking up on that. So just talk to your accountants if you need help, but we cannot collect any fees on your loans. That is important. So the loan, the payback starts 6 months after you are funded, and then there's a forgiveness portion of this loan. So if you get this loan and over the 8 weeks from the time that loan is funded, you pay out your payroll cost. It's the same payroll cost we talked about earlier, and you pay your mortgage payment, your rent payment, your utilities. Utilities is water, electric, telephone, all those things that you would expect. So you pay all of that out, and guess what? That gets forgiven. So the government is giving you a loan. Your bank is giving you a loan. It's guaranteed by the government. But then after you pay your people during this time, over the next 8 weeks, you then apply to get your loan forgiveness. The government will then pay the bank, and your loan is then forgiven. That amount is not included in taxable income, so you get that back, and that credit is wiped off. So, how does that work? Let's jump into the next slide. And here's a quick example of that. So, you pull your payroll records, and these numbers are made up to make this really simple. You pull out your total payroll cost, which is salaries, health insurance premiums, 401k match, local taxes. That's $1.2 million. You divide that by 12, and you come up with $100,000 monthly average. You take that 100,000 multiplied by 2.5, and that comes out to $250,000, and that's your loan amount. The one thing you have to be careful of, any employee that is getting paid over $100,000 a year is excluded from that calculation. So it's taken out your highly compensated employees. So keep that in mind when you're doing that and you're looking at that. So then your loan is funded, you then start paying your bills, and there's a little bit of disparity there too, because some people are saying it's based from 12/15. Some people are saying it's from the time the loan is dispersed. I read the law, and I read it as from the time the loan is funded and closed. So from the time you get your funds, that loan's funded, you pay your employees your payroll, you pay your mortgage, you pay your rent, you pay your utilities, and at that point, and looking at our example there, that first one, let's say that came up to $350,000. Well, at that point, that $350,000 is fully, the $250,000 loan is fully forgiven. That's because you had used the funds during that time to pay, in that 8-week period, your payroll, your mortgage, your rent, your utilities, everything that loan was intended for. And because you've done that, the entire balance of that loan has now been forgiven. Now let's look at the next example. Those expenses, instead of being $350,000, was only $150,000. That means of the $250,000, $100,000 would not be forgiven, and you would have to pay that. And you would start paying that back 6 months after that loan was funded, or 4 months after the 8-week period. So if you're looking at that, you're like, wait a minute, they're giving me money. Yes, that's exactly what it is. The government is actually giving you money to pay your employees, and they're going to wipe that loan out. And I can't say enough about it. Call your banker now. It's really important. Get the ball rolling. The last thing that I need to mention here is you must apply for forgiveness. So after that 8-week period, and you know what you have spent, you would then apply to the bank and get that loan forgiven. And at that point, you roll that back. Hopefully at that point, we're looking at probably 3 to 5 weeks to get this funded. We're looking at probably May, June. So payrolls from May to June would probably be in that 8-week period. So looking in July about filing the forgiveness, and hopefully by that point we are back, business is booming, and you're taking off and well into recovery. So with that, we've covered the Paycheck Protection Program, which to me is the most important part of the CARES Act, and hoping to get some questions on that. Go ahead, if you're watching this while it's recorded later on, post your questions, and we will be back every day this week at 3:30. We're going to be taking your questions, trying to figure out ways to help you with your business, and with that, we are out. So we're going to go ahead and stop the stream, and we'll see you tomorrow. Thank you, everybody.